everybody, welcome to the Closing Beat. Happy Thursday. I hope you had a good day today. It was a busy day in the stock market. We're going to cover all of that, of course. We're going to go through the stock market here in a real general sense. You've got everything up and above and around and charts and everything to kind of help you out with some of the information that we're going to go over. If you're one of our customers tonight, don't miss the class. You've also got the link in your email for the replay or to watch it on demand. We're going to go through our portfolios, the stock market, kind of a state of the stock market, something there. So we're going to get in great detail. And of course, if you have stocks that you want to talk about in your portfolio or any stocks that you're trading on the outside, well, we'll be welcome to talk about those as well. That'll be tonight at 8 o'clock. And that's all I have as far as promotional things today. You can see the stock market was lower today. The markets are allowed to fall, so it does happen. And the problem is, if you watch TV, you got scared. And so this is yet another way, you know, you say like those global news channels, they push agendas and everybody's got their opinion whether it's right or wrong. But the point is they can make something happen when they want to. CNBC, Bloomberg, same thing. Every time the Dow was down 100, it was like dun dun dun, and the red thing came in and the bear came in with the claw and it said Dow minus 100 and then Dow minus 200. Oh my gosh, you know, it's like all this sort of freaking people out sort of thing. It's very common. It does happen. But basically, we just kind of want to go over what happened, you know. So what's the deal with the stock market today? Dow losing 200, the S&P losing 23, and the Nasdaq losing 145. That was your worst performer of the day. You've got the interest rates, right? So we kind of followed through with these the other day. Actually, I'm just going to go right to them if you don't mind. We'll just dive right in here today. Should be able to scoot on over here. If we look at long bonds, you can just see they sold off again. Yesterday was really what caught everybody's attention. That was one of the bigger moves that we've seen in a while. And so the argument all day was not necessarily that rates are going higher, but how fast they're going higher. And it's the same thing if you look at an individual stock. The argument of we'll talk about it in a minute, but that Tilray, that was the most recent one where everybody was like, whoa, it's not that it's going up that's scary, it's so exciting, it's how fast it was going up that makes people worried. Well, that's what happens in bonds. You got interest rates spiking a little too fast, and that brings everybody to wondering what's going to happen next. Well, today they sold off again, and so interest rates continue to move higher. It just makes people nervous. I mean, that's really the bottom line. Now, I'll tell you, this isn't over. So if you saw the stock market, if you've been watching the show all week, I've been saying, hey, guy spinning the plates, he's having a hard time spinning the plates. The next day, hey, you notice how the markets were higher, but the guy spinning the plates, the analogy that I was using, it's just not working, right? There's a lot of weakness underneath here. So today really is not that surprising to anybody. I'm not one of those I told you so guys. I like to be the guy that tells you ahead of time. So for 2 weeks now, I've been telling our customers, hey, if you want to widen out, if you want to change investments, you want to rethink things, you've got a chance to do it. And of course, we'll cover that tonight. So really, it's the interest rate things. Now, there's a stat. So it goes back, 1960 maybe, last time I saw this. If yields move more than 25 basis points in a 30-day period, historically, over the 40-year period, the S&P 500 comes to a grinding halt. So if you follow interest rates, if that's something you're interested in, there's a lot of these old sort of stats that people remember. If yields move more than 25 basis points in a 1-month period, 30-day period, then the S&P 500 tends to flatten out, and that grinds it to a halt. So kind of people following that same sort of thing today with that. Also, you got to keep in mind what's happening with the market now. I've done a lot of great videos on how target date funds were taking too much risk. They were all in stocks, right? Even though target date funds maybe weren't coming due for 20, 30 years or whatever, or even 5 or 10 years, they were all in stocks. Well, now what's happening, you've got tons of money that's been in the stock market sliding over to interest rates because, hey, I don't know, 3.5%, maybe working on 4% is at some point is not a bad deal. And so as rates start going up, these big mutual funds, target date funds go, hey, wait a minute, we don't have to be 100% in stocks anymore. We can get a little yield over here by going back to bonds. And so you've got that rotation as well. I haven't noticed anybody say anything about that, but you can bet that that's what's happening because those target date funds, although I bash them, they're not trying to be bad guys. They're trying to do the right thing for you, but they were taking excessive risk. Now they're able to back out of that, and I'll keep you updated as they start reporting that they're doing that. Anyways, that's enough of my stuff. We'll do a lot more tonight. 8 o'clock there if you're one of our customers. Don't miss it. So interest rates a big focus. Long bond hitting new lows, short bond. I'm sure you heard about it. You saw it already today. Just the steep and fast sell-off. That was the excitement around the whole thing, was that it was fast. Banks finally participating on a down day. The banks decided to go up here, getting back above the 200-day moving average pretty much across the board. If you look at banks, they had a decent day. So that's all I have to say about that. If you look at, where is it? Oil pulling back from its highs. Not bad if you drive a car that uses gas. So after making that big high, you can see it on the charts there, just taking a break today, down 2.3%. So a nice little pullback. That's, again, just too far, too fast. It doesn't mean something's wrong with the price of oil or all of a sudden it's going to start going down. Here we go. Constellation Brands in the news today. They reported earnings. That's 5.5% gain on the day, up back above the 200-day moving average. I believe that's a 3-month high for that one as well. Full year outlook, company says we're looking good. Things were good. We expect things to continue to be good. And so the stock's higher by, 5.3% on the day. Remember, they're working on they want to do the cannabis beer thing too. So that's that one. Eli Lilly, that was one of your strong ones today. A lot of people were focused on that one. They got a diabetes drug that they're testing, and apparently is doing really well. Type 2 diabetes. It says that it's showing clinically meaningful blood sugar reduction and weight loss in people with type 2 diabetes. So good for them if that works out. Volume about 3 times higher than average. Stock breaking to new highs. That's a 4% gain. Let's look at Tilray. There you go. I'm going to go very short on Tilray here. So they want to raise $400 million in debt. They don't make any money. They're essentially going out and offering a very creative way to give convertible notes to raise $400 million in debt. Okay, company doesn't make any money. They need the money. They admitted themselves they need the money to fund their day-to-day operations. Oh, and pay off a mortgage that they wanted to pay off. It was like $9 million or something. So if you want to invest and you want convertible notes, they're going to be offered in Canada only, actually, and you got to be a qualified investor. I won't bash them today, actually. Here's a great example of what we talk about on the Doe Show. So I mention this all the time. You take debt when you can get it, not when you need it. That may not mean personally. I'm talking about a business here. So a business goes and gets debt when they can, and Tilray, front and center in the headlines. This is a smart business move on their part. Front and center in the headlines. Everybody knows their name, and they go, oh, hey, we're trying to raise some money. The positive sort of perception of the company right now is things are good, things are going to be great. These guys are going to be worth more than the 16 billion market cap that they have, and so they can get debt. Brilliant on their part. Remember, you take debt when you don't need it, because when you do, it won't be there for you. Nobody's going to give it to you, okay? So that's how that one works. Okay, General Electric, let me slide back over here. There we are. General Electric, up 1.5% today. RBC, I'm finding a lot more analysts are getting very direct about their upgrades and downgrades. The guy from RBC says the bottom is in General Electric. He's got a $15 price target on it. He says that $11.21 is and was the bottom of the stock price. I think that's brave. Good for him. McDonald's, probably be the last one we do here unless you have any questions. McDonald's up actually about 0.75%. Bernie Sanders asked them to raise their minimum wage to $15 an hour. McDonald's employees went on strike. TGI Fridays went on strike. Uber Eats drivers went on strike, I believe. They all want higher pay. They saw what Amazon did over there. Like, look, they're all getting a raise over there. Not true, by the way. They're getting a raise, but they're foregoing all their stock options, all their bonuses. So they kind of like pulled the rug out from them there. But anyways, everybody else is like, hey, I work at McDonald's. I want to make $15 an hour. I'm going to leave my opinion out of this one. But either way, it's hard to leave your opinion out of something like this. But McDonald's still higher by 0.75% on the day. I don't know if they responded, to be honest. I know Bernie Sanders asked them to raise to $15 an hour. It was a whole big uproar thing. I'm not sure if they responded. I didn't see that. FedEx down about 0.75%. Get this, if you're a FedEx pilot, good for you. They're paying pilots that are about to retire. You want to talk about a retirement plan. If you're about to retire, they're saying, hey, whoa, stay another year with us. We'll give you anywhere from $40,000 to $110,000. Huge pilot shortage out there. So FedEx is offering those types of bonuses. So honestly, if you're a FedEx pilot, just say no, right? Hold out. Go for the 110, man. Don't go for the 40. All right, Campbell's Soup selling off their fresh foods business. That makes sense. They're better at canned stuff. Apple and Amazon deny a sort of a Trojan horse kind of attack on their systems. That was just a bunch of nonsense news out today. And then Square down 2.5% on the day. They have a thing, you know what Square is. It's a payments processor. Now they're saying if you sell large ticket items, you can actually bill in increments, and they'll take payments if you're going to sell using the Square product, the Square platform. So that's all I got there. Let me see. Did I catch everything? I'm going to look. Costco reported earnings after hours. Might be down a little bit. Did they report yet? I know today was the day for Costco. Yeah, Costco's down a little bit. On earnings, Facebook down 2% today. Amazon down 2%. Apple down 2%. I think we covered everything else. So I'm going to wrap it up there. We will be back to, well, no, look, hey, we won't be back tomorrow. No dough show tomorrow, and no, well, there may be a dough show, but no closing beat tomorrow. It's my daughter's 18th birthday. We're going to have a party, so we're getting the house all ready, and we'll have to, I'll be busy. So no closing beat. Hopefully the markets are nice and quiet. If you're one of our customers, we'll see you tonight. If you want to go over an overview of the markets, you just kind of want a detailed overview, that's great. If not, no big deal, but the recording will be available for you in the email that you have, and enjoy the rest of your day. Talk to you then.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.
Hey, wait! Before you go watch one of our other great videos, have you had a chance to see our new Fin Tips videos? They focus on one topic at a time, covering investing, personal finance, and anything that can quickly help you with your dough. Best of all, we'll keep it real short, because we know time is money.